In today's one-to-one, we will talk with Francisco Mainez about financial crime analytics and how an intelligence-led approach can support compliance team to achieve better risk results. Francisco has led teams supporting activities related to data extraction, analysis and insight reporting, covering money laundering, financial crime typologies, operations, customer due diligence and tax evasions, among other areas. Prior to HSBC, Francisco fulfilled roles in Standard Chartered Bank in London and Singapore after completing several tours of operations in military intelligence for NATO and the European Union. So without further ado, let's start this week's conversation with Francisco Mainez. Francisco, welcome to FinCrime Agent. How are you today?
Very well, thanks very much. I'm really happy to be here. Thanks for the chance, of coming to your channel, which I believe has been growing, pretty quickly. So, kudos to you.
Thank you. Yes, the channel has been doing quite well, and it's going to be a nice interview today. So I really look forward to speaking with you. And maybe can we start by sharing with our audience a bit of let us know about your background and what you're up to in these days.
Well, you're happy too. Despite the fact that I've been working in the banking industry for quite a number of years now, my background is actually not banking. It's not in the financial services industry. I started doing military intelligence. That's where I, professionally grew up. Yeah. I work mainly with two multinational organizations, the European Union and NATO, mostly around the deployed missions in Bosnia, Kosovo, and a little bit less in Afghanistan. When you wonder about how did you transfer skills, you could definitely say that they're completely different industries, financial services and intelligence. But when you actually been working with data and perform analysis and investigations, they become quite similar. Because at the end of the day, the ultimate goal is you're trying to provide context to the data gathered by different units. Be troops deployed, be your branches in a bank, and ultimately support an informed decision to management in relation to the risk or threats facing your organization. So in the end, they're very, very similar, and that could probably explain why you have so many ex-law enforcement or ex-military in compliance and financial crime.
For our interview today, you have very kindly offered to discuss some of the findings from a use case that you and your team have been working on. If I understood correctly, the aim of the use case was to understand how an intelligence-led approach in financial crime analytics could bring better results for the identification of financial crime-related risk. So I first would appreciate very much if you could maybe confirm that my understanding about the scope of your use case is correct, and then also expand on what motivated your team to complete an analysis in this space.
Well, it was mostly trying to do things a little bit different, because when the system works and you've been using the same tools and the same approaches and the same process for so long, but that the bad guys out there, they change and they adapt to change faster than sometimes you do, because you're limited by constraint by your organizational capabilities or the way your organization is structured, then you need to start thinking outside of the box. And one of the things that we realize is that financial crime investigation, they follow a pretty linear process. You get the customer and transactional data, you try to make progress from there. Your starting points will always be CDD, customer due diligence, and transaction monitoring data. What typically tends to happen, because the financial services is the land where you always try to be more efficient, is that you become proficient with it, but inevitably you start applying the same approach to every single case. And what happens in the end is that there's this tendency or this trend that you become more efficient, so you are able to close cases quickly as you become better at it, but not necessarily more effective, which means producing tangible outcomes that will come up with a defined or successful result in your investigation. And at some point we thought we needed a different approach. And one of the things that we imported from my old industry was the application of what we call primary intelligence requirements, which essentially is a tool that helps your data collection and processes, to focus and align your efforts toward the areas you consider to be higher priority. The reality is that nobody has unlimited resources, and the limited resources in terms of people, systems, data you have they should be focused to what you believe are your high threats or your high risk. So what we did is apply that principle and said, all right, so what are our primary intelligence requirements or PIRs? For example, we're going to be looking at keeping an eye on crypto assets or keeping an eye on typologies related with human smuggling or with money mules, and that's when you map your resources and your data against that, and you're more able to tackle those typologies and to provide more effective analysis on those typologies because you have already pre-aligned your assets towards it.
And my next question for you is, what are the advantages of driving an intelligence-led research in financial crime analytics and data?
The main advantage is that if you succeed, you become more flexible because you combine elements and methodologies that are already there, which is triage, like determining what is the priority of the cases, in which, let's say, bucket those cases should go. Then you follow your investigation, and then you do case management. You manage your cases, and then you align your investigative work with the previously built financial typologies libraries. One of the things that the team did, probably from when we created the team, when we created the function, in a multinational organization, you cannot have a typologies library that will say, all right, so when it comes to human smuggling, or we come to money mules, which I already mentioned, these are the red flags. No, because they're going to operate typically in a different fashion across your different markets. And also, you're going to have different markets where money mules are going to be a main concern. But then you will go to the next market and you will find out that things like trade-based money laundering is your main concern as opposed to other ones. So you need to develop a country-based or a market-based financial typologies library. Off the back of those typology library, you build your key risk indicators. And one key step when you're managing data is that now you align your key risk indicators to your data sources. So when you believe, or one of the countries under your scope is asking for investigative support in money mules, you know exactly where to go, and you know exactly, okay, so money mules, we're going to be using mainly transaction monitoring data, and these are the key data fields that we need to use. Because again, typology is always, will give you a good indication of what data you need, the one that is associated with those risk indicators or red flags. And we also expanded our data collection. We did a further thinking outside the box to expand our data collection to non-traditional anti-money laundering fields, for example, IP addresses, which traditionally they've been falling more into the fraud space. And we'll probably get later, to discuss that one of the challenges that presented. But the good thing is that it made us more flexible, because it enabled us to look for different views and angles in our investigations.
Okay, Francisco, that's very clear. Thank you for expanding on that. Maybe at this stage we can go more into the details of the work that you've done. So maybe you can tell us a bit more about how the use case that was developed in practical terms.
Absolutely. One of the use cases that we used to work a lot, or we've been working a lot, has been big public investments in some regions of the world. In this scenario, you're going to be having a significant volume of transactions, and typically in areas like infrastructure or technology, and you're going to have criminals that will try to disguise the transactions under the vast volume and that big umbrella of activity that is generated on a daily or monthly basis. So what we did is, when we're looking at this particular typology, we defined the risk indicators associated with those activities. For example, take one, high volume of crypto asset related transactions, and then ask ourselves, how can we pick those transactions when you may or may not have dedicated system to do it, or you may have to rely on third parties to help you on that. And then you need to verify if those transactions, once you get them, or once you detect them, are commensurate with the customer's declared activity. So if you're having, for example, I know it's a very simple example, but you're having, for example, somebody who has a small business and is a grocery shop in South London, and then you start seeing a significant activity in crypto asset transactions that lead to believe that maybe is not aligned with that type of activity, and that's a red flag. And then you start digging from there.
It's an important aspect, this one, and I've seen it coming up more and more, to make sure you have sufficient systems in place that will allow you to understand if the intended use and volume of transactions, for example, of that customer is actually aligned with what then the customer doing in real life. And would you be able to also share maybe some of the key findings or perhaps lesson learned obtained as part of the financial crime analytics from your use case?
Well, as it typically happens in these cases, there was a lot of lessons learned born out of trial and error. We tried something like, okay, let's try to find these indicators by analyzing data and doing using techniques as name matching. And what happens is that you get a lot of results, but you need to understand, or you need to assume that most of the results are going to be false positives, because you're matching names. If you apply things like fuzzy logic, you're even going to increase your number or potential volume of false positives. Others, they were probably too ambitious and made us rethink about the approach. Like, okay, so one indicator could be the purchase of luxury cars. That's very well, but how you identify these in thousands of lines of data? So we need to rethink, maybe that's not the risk indicator that we should be looking at. Another very important lesson learned was the power of OSINT, the open source intelligence, which is a relatively new concept that again has been using for many years in intelligence, in government intelligence, but now it's kind of making its way into the financial service, into financial crime investigations. And in some cases, you're going to have to obtain the data through public data. It's available out there. Some of the cases you're going to have it's paywalled, so you have to pay for that source. One example could be, for example, Factiva. And then the most important thing is not just getting the data, is that how are you going to combine it with the data that you own, like customer, product, and transactional data, with your proprietary data, in order to make it useful, in order to add value, in order to add context. Because at the end of the day, we learn, and that's another of the lessons learned. Context is everything. If you look at 10 years ago, we were doing financial crime analysis and investigations with less advanced technology. Now we have much better computer power, storage capabilities. So now things like machine learning, artificial intelligence are very good to identify trends, to say this is the evolution of this transactional activity pattern with this customer. And that's all well and good, but the question is, does it make sense? Can we add context to that? And I'll give you an example. If you're looking at, for example, customers that are probably paying their mortgages, their houses really fast, transactional data will very quickly tell you these are the list of customers in this market that are paying their houses in a much faster way than the average. If you basically benchmark against the segment they're in, or the rest of the customer population in that market, or even the rest of the customer population globally, that's great. But does it make sense? Does it mean necessarily that they're doing an activity related to financial crime? Maybe not. And that's when you need to add context, and that's when you're going to need other data sets. For in this particular case, it will be product data. While in some markets, it turns out that customers are encouraged to basically do faster payments toward their mortgage, which is good. In some markets, you can renegotiate your mortgage, and if your data doesn't follow, it looks like in isolation you have this chap buying a property in a very expensive part of London, just to name a location, very quickly, which is suspicious. But can you look back in the data and say, is this a property that has been remortgaged, so that the customer is changing his product on a 2-year basis? If you don't have that ability, or your data quality is not good, so you cannot learn that from data, of course it sounds suspicious. So it's when you add context, when things become more clear. Another clear example, and that's when you combine things from open source intelligence, something as simple as, can you Google Map this address from this customer? And as you know, in Google Maps, some street you cannot have in a street view. You can see the point on the map, but you cannot put it in the street. And if you find that there's something like 20 customers in the same address that turns out to be one of those funny places that Google Map wouldn't give you a street view, then that's a big red flag. It's something as simple as using Google Map, but we learned a lot in that process. That obviously your proprietary data is going to tell you a lot, but in order to help with the contextualization, open source intelligence is very valuable.
This is super interesting. So I'm thinking that this type of research could possibly be replicated, right, by other teams that are also operating in similar financial crime analytics space, like the one that your team was operating on. Which would you say are the key ingredients? I mean, the most important elements that a financial crime analytics team would need in order to replicate again this use case, obviously using their own data?
Well, there's quite a few elements that you will need there, and there's probably not a recipe like one size fits all. But in our experience, we found out that the first one is a collaborative culture across financial crime teams and different business. In your channel, I remember that you mentioned something called FRAML, AML, the combination of AML and fraud, which is very valid. It's a very valid concept because we see that financial criminals, they're not constrained by things like, oh, I work in money laundering or I work in fraud. They basically do everything, and they'll do every single trick in the book in order to commit fraud or launder the proceeds of their crimes. And sometimes, you will find in some financial institutions, there's not a full integration between those two disciplines. And then you could even add a third one into the equation, which is cybercrime, cyber risk. So across function, collaborative culture is essential. And because if you establish that culture, you will be able to break the silos that are preventing things like a successful exchange of data. Then you need to back up that culture by a strong data sharing policies, both across different markets. You need to have data sharing agreements with the different markets, especially if you're operating in a multinational environment, and also internally, in a place like at the group level. The last thing you want to do is run into somebody who holds the key to IP address data and get an answer like, oh, we never shared the data with you, so we're not going to do it. So you need to have policies that will back that up. So you show the policy and said, yes, we're working on a cross-functional case. We need access to this data. And the last one that we found it was very important was training. And I always say that when you train somebody to do something, that's the easy part. The difficult part is for those people to getting rid of the old way of doing things. And it's a natural resistance to change that we all have as human beings. Learning something new is not difficult. Getting rid of the old way is probably the bigger challenge, because then you apply a cultural dimension into it. But those three elements, I will probably say, they will be a good solid foundation if you wanna achieve this type of transformation in the way you're doing financial crime investigations.
Thank you, Francisco. Thanks a lot for sharing that with the audience. And before we end our discussion, I have another question that I wanted to check with you, as I was curious to know which was maybe the aspect that you have enjoyed the most as part of that project and in that work, and which perhaps was also the most challenging part that you faced during the development of that use case.
The one that I enjoy the most is actually see how you start thinking outside the box and you started to see tangible results. It's not like you're going to change a little bit and then you're going to get all the financial criminals out there, but you see changes that you wouldn't have seen if you were doing the same processes and the same approach. You were using the same approach as you have been using. So just changing a little bit is when you can see tangible results, and actually you can see the impact. And it's difficult to motivate people in your team when whatever they do only translates into emails and meetings. But when they do something and they can see the impact, and they can see one of the things that you need to establish, back to probably the previous question, is a feedback loop. Whatever you do, you want to know what happens. You don't need to know the first, last name or exactly what happened, but you would like to see, all right, so this customer was successfully exited, or this customer has been inhibited and now is pending the results of a fourth investigation at the country level. So when you see that impact on the things you do, thousands of miles away, that's a very powerful motivational tool. So that we really enjoyed that, seeing those results and seeing an enhanced level of collaboration across regions and countries. And the most challenging part is basically breaking down the silos. Is running into the culture of we've been doing this for many years, and we're not going to change. And then you need to see it, and you need to empathize with the other party, and you need to understand. And actually, it's a good exercise for you to understand what is preventing them in their mindset to achieve that level of collaboration. They've never done it, and they're probably scared about, I'm going to do this, I'm going to give this data to this chap, and God knows what's going to happen. But actually, when you can prove this is how we're going to use this data, This is how we did it before, and this is the results. It can be a long process, and it's definitely challenging. And it's ironic because you will probably think, well, the most challenging thing is probably not getting the data. But the most challenging thing is actually knowing that the data is somewhere there and finding the person that holds the data and convince that person to share the data with you. If the data is not there, it's relatively easy because you build a framework to collect that data. If it's there but you cannot get it, that can be very frustrating.
I can definitely relate with those type of points you brought up. It's very important to maintain the team in the loop with what has been done with the outcome. Otherwise, we end up forgetting the end game of why we are working in the financial crime prevention space. And on the other point where you mentioned about the difficulties in breaking down the silos and cooperating with other teams, especially with very large organizations, that could be quite a challenge sometimes. So I kind of imagine this could be two areas that you would touch, but thank you for sharing your feedback. And we got to the end of the interview today, so I just wanted to check if people want to get in touch with you, which is the best way to contact you, perhaps where they want to link with you on a professional level or get some more information from your side.
LinkedIn. I try to be as active as I can there, and I particularly like because I think it's a really good platform to not only to establish a good network, but also to exchange knowledge and be up to date in things. For example, those typologies that I mentioned before. There's always constant updates on how the bad guys are trying to do what they do, and how we're trying to prevent them from doing so.
Thank you one more time, Francisco, for coming to speak at FinCrime Agent. Today was a fantastic experience having this interview with you, and a great pleasure to have you on my channel. And obviously, I hope we can chat again in some point in the future. Perhaps you can give us some more interesting use cases and example that you've been working on.
Absolutely. Thanks a lot for having me. Again, it's been a pleasure and a privilege. And let's stay in touch.
Thank you, Francisco. Thanks again. You have a good day. And with that, we got to the end of our discussion today with Francisco. If you haven't yet subscribed to FinCrime Agent, remember to click that subscribe button so you will be notified as soon as new interviews, like the one you just watched today, will go live again on my channel. Lastly, thank you for watching, and I hope you have enjoyed today's video. And until next time, see you soon.